All right, it is 8:08 a.m. Central Time on Monday, August 21st, 2023. Let's jump right into the trade prep for today. So our intermediate term bias is bearish and our short term bias is neutral bearish. And heading into the open, the larger time frame question that we're going to be focused on is whether the recent breakdown below the 44.06 to 14 area is still in play, or are we now starting to see a short-term rebound and bounce off of a deeply oversold condition? So if the sellers are going to maintain control, at least on the day time frame, we want to see ES holding below the 44.06 to 14 initial resistance. And so far, we've already seen a response back below Friday's high. So at the moment, the sellers are in the process of regaining the intraday control that was perhaps in question above 43.96. So if off the open, the market is holding below 43.96, that would be a sign of weakness. And if we can now get a break below the 43.9175 to 93 area, that would further strengthen that idea. So 91.75 is the 24-hour midpoint, and right now the VWAP is right around 43.93. So if we can break below 91.75 and 93, that would further confirm the idea of sellers stepping in, and that can then open the door for a move down into the gap fill at 82.75 and the initial support at 74 to 82. So early in the session, our focus is still going to be more so on the short side, and we are going to exercise caution on the long side. And the only time it may make sense to take a long is if in real time the market is exhausted into initial support, or especially into 43, 46 to 55, and we are not seeing signs of initiative selling. So as long as we're not seeing big and sustained downside momentum or excess weakness on the day, we can still consider long setups, but ideally when the market's exhausted into support. The other situation where a long may make sense is if in real time the market is holding above 43.96 and we're seeing a lot of strength and upside momentum, then there may be an opportunity, but we are still going to have to be much more cautious and selective on the long side and keep our focus more so on the short side. So by default, we are going to be looking for sellers to be active at initial resistance, and I've also created a level at 44.07.5, which is the overnight high, and depending on how the market approaches that area, if we do get a bounce back up into it, it might make sense to just take the trade with your stop behind the overnight high. Now that is of course going to be a much more aggressive execution. So we're going to have to read the market in the moment and determine whether it's worthwhile to be that aggressive, because holding above 43.96 is a sign of strength. And the high probability response at 44.06 has already happened. So the ideal time to short 44.06 was when the market first got up there in the overnight session. That was the ideal time to take the trade, because if you took it then, right now the market would have already given you your scale out target. You would, for the most part, be sitting risk free. So that was really the best opportunity to short in the pre-market session, just purely based on directional bias and good trade location. So it just goes to show you how much edge there is if you simply take trades that are in the direction of the dominant bias at relatively good trade location. And if you watch the trade prep video from Friday, August 18th, you'll see that 44.06 to 07 quarter was essentially an automatic short for us on Friday. And that idea just continued into Sunday's overnight session and Monday morning. And so far, we've seen a pretty nice response off that area. So for those of you who trade the overnight session or are up early enough to catch some of these moves, that would have been a valid short idea. And now, as we head into the open, it can still work as a short idea, but the high probability response has already happened. So now we just need to be a little bit more careful, especially because if we start holding above 43.96, then that in itself would be a sign of intraday strength. So if the market is heading back up into initial resistance on broad market strength and some big and sustained upside momentum, then we may need to be more cautious even on the short side there. So we're open to shorting initial resistance, but again, we're going to have to just assess and just make sure that we're not going up on some unusual upside momentum. As long as the NYC tick is around plus 400 to 600, I think it's okay. But if you start breaking out above 4,400 on a plus 1,000, plus 1,100 tick, that would be indicative of larger time frame buyers stepping in. And in that situation, the market may have to go up into the 44, 2675 to 3675 area to get a better sell response. So that's the only caveat at initial resistance. But again, by default, we will look for shorts. So we can see that 44.17 to 23, one tick ahead of the high volume node, gives us 3R simply for a move down into Friday's high. So that's conservative trade location, and first time up, especially if the market is exhausted into that area, I would expect at least a reaction there. And given our directional bias, I am not anticipating the market just slicing through resistance. I think that even if we are going to head higher, it's going to take some time to process each resistance zone, and the higher the market pushes, the better the resistance it will be running into, and higher the odds of sellers stepping in. So we can see that 1875 gives us a good short. That would be a good price. 31.5 gives us a nice entry, and again, we don't need to see a crazy reversal on the day. Even if the market simply pulls back into the 17 to 23 broken resistance, we can still get some decent reward potential out of it. So we'll look for 17 as the high probability. And as far as our final target goes, I think let's look for the overnight high at 07.5. So the most aggressive entry we can take here is going to be 30.5. That gives us 2R down into 17 and 07.5. So that's going to be the most aggressive entry we can take, and that's perfectly fine. If we ever want to make more on this trade, instead of trying to get a better price, we may just want to risk a little more on the idea. So we can always size our position for 1.5R of risk or 2R of risk, and that'll double the profit as well. So over here at 30.5, I think that's going to be a good spot to look for shorts. First time up. I like the idea that our scale out is ahead of the 17 to 23 resistance, so this should be a pretty easy scale out to hit from 30.5. And again, we can always increase our position size to get more out of it. So we can risk 1.5R at this zone because it is a better area of resistance to begin with, and it has potential to cap the upside on the day. So we'll set that up here with 1.5R of risk. On the downside, initial support today is 74 to 82. It's a potential long, but it's not a high confidence long because of the directional bias supporting the sell side. So the thesis here is that if the market is going to maintain some of the strength from the overnight session, we should not reach initial support. In that scenario, we should hold above pre-market support, which we're using as the micro bull bear zone as well. So just by the fact that the market is pushing down into initial support would already be a sign of intraday weakness. And because the overall environment is more bearish, when you get a intraday bearish signal into a support zone, that is an area that calls for caution. So definitely not planning on being aggressive at initial support. You can see that over here, I think we should be using 87.5 to 96.5 as the high probability. So we'll do that. Broken support can act as resistance. And the final target in this case, let's be conservative and just set it to 95.5, a little bit ahead of Friday's high, 95 actually. So, 76.75 gives us at least 3R back into Friday's high. Let's also set up a trade similarly from here, from the 67 quarter level, and we can see 72 gives us 3R. If the market's exhausted towards 67 quarter, this would be a safer bet as compared to the 76.75 entry. So we'll leave that as is. We'll actually set this up as a daisy chain just to get an even more conservative price, and again, may not even execute the long side today anyway. 46 to 55 I think is still a decent enough area of support where I don't think we're going to slice right through that zone. And that is something that I think about when I'm looking at zone fades. The probability of the market slicing through the zone. At initial support, the probability of ES just going right through the zone is certainly higher as compared to the 46 to 55 area. So if we continue to run on below average volume, so for example right now we're running on 86% in the micro ES and 79% relative volume in ES. So if that theme continues, off the open, we don't see a pickup in volume and the market continues to run on around 80% relative volume, then it would take a lot of downside momentum to take out 46 to 55. I think the range potential may not support a break below 46 to 55. So I'd be much more comfortable buying that zone first time down, and on the upside, the broken initial support we can use as our target, and we can see that at 52 quarter, if we're jumping in, just a move back up into the broken initial support would give us close to 2.5R. And if the market does end up going higher, then we can get 3R. If you want to be more conservative and, get 3R into 74, then the entry would have to be 51. So just a point above Friday's RTH low. So that would be good trade location, and depending on the time of day, that could be a good setup. So for example, if the market goes down into that 46 to 55 zone during the first hour, it would make for a better buying opportunity. Whereas if that zone gets tested in the last hour, it's going to be riskier. So time of day is going to come into play here, but 51 would be a good entry. Up to 53.75 is a good entry. So 51 to 53.75 is our execution range within the zone. And again, if it goes higher, then fine, we get more out of it. But the nice thing is that off of 51 to 53.75, even if we only get a bounce back up into 74, we can still get 2R out of it, and potentially even 3R if we get filled at 51. So that would be a good spot. Below 46 to 55, I'm not as interested in buying, even though the market would be hitting a range extreme. By the time it reaches 25.5 to 28.5, 33.5 to 38.5, if the market's testing those zones in the last hour, not interested in buying, and I highly doubt ES would test these zones in the first hour. But if it does test in the first hour, then there could be a setup here. So these are setups that we're considering today. 72 and 75.75 long obviously are going to be very discretionary, and I'm not really that motivated to take these trades. The lower zones have higher potential of working out, so those are possibilities. But the short side, I think we can certainly consider at these prices, and on the downside off of 44.01. I think the only difference is I think the target here should probably just be the 74 area. Actually, we'll just set it, right here. So 0175 and this one is fine at 74, 82. So, all right, we will wrap it up with that. It is 8:23 a.m. Central Time, so market opens in about 7 minutes. Again, if you found this to be helpful to your trading, to the way that you set up your own trades, then please do like and share this video. And aside from that, good luck trading this week, and I will catch you in the next one.